Welcome back to what I believe is the 15th weekly forecasting video, where we go through the Forex financial markets just to sort of pick a directional bias within the markets, and sort of I go through what I'm seeing in price and those sorts of things to help you guys. So jumping straight into this week's video and forecast, we have been monitoring over the past couple of months now this run on sell side liquidity on a weekly chart, and then this sort of movement higher and higher and higher. Now we've taken this external range high here. If I just mark it out, we've taken that right there, and we sort of failed to close above it or anything like that. So we had this institutional order flow entry drill from this fair value gap. Out now. Where am I? Have it on a toolbox, but it's there we go. Yeah, so we had this. The bodies respected that in its close, and then we went up, so we were forecasting sort of another run higher. However, we have now had a weekly inside candle, so I'll just delete this. What I mean by a weekly inside candle is this high wasn't taken or the low wasn't taken, which means when we've had no run on a significant liquidity pool, which on a higher time frame, when you see an inside candle, it just means the time frames below that will be a consolidation. So if we drop down to the daily chart and then a 4-hour chart, we can see that it's just back and forth. We're not taking too many ranges or anything like that. We're just sort of jumping back and forth. Now, I did say in the last commentary that I wanted to see a convincing close above this high right here. I'll just mark this out just sort of to illustrate what I'm looking at. However, we failed to close above that with a body through it. So this is an early sign that we are struggling to take this liquidity and fund this move higher and higher and higher. And we've come back within the range. I think this looks even worse on Euro. If we just have a look here. Yeah, so delete that. We had a run down. We had a retracement. So then we should be taking external range after a retracement in expansive markets. However, we didn't. We failed to take this low, and then we've come back up in the range. And this is early telltale signs of consolidation. So I'd be very wary of framing long positions now and looking for anything else in the markets. We can see that we've come back into the range. We failed to take external range highs, even though we had a long bias, and we're sort of chopping around now. So early signs, reduce your trading frequency, because when direction and expansion isn't clear and we are in more consolidated markets, then trading will become more difficult. There's a whole reason over the past couple of months where we had these runs higher and higher and higher, and we were picking just optimal trade entries. 2022 ICT model, displacement, run on sell side, fair value gap, trade higher, initial consolidation. This was all easy because we had narrative and fundamental analysis behind it. However, this just isn't the case in this situation. Now, I spoke a little bit more on this last week, but pairing this with the timing aspect in the market, what do I mean? So we are now on the, as the date of recording this, the 30th of November, and we are going into December. Now, we do know from seasonal tendencies and just historic data that open orders within the market are usually reduced in December, which means there isn't as much liquidity floating through the markets in order to fund these bigger institutional moves higher. So we usually see a consolidated price action. So pairing that, we expected this to become slower, and now we are actually seeing that. It's good to just reduce your trading frequency and not get too involved in trying to keep the frequency that we did while we're down here, as this will just likely lead to unfavorable results and stop losses getting hit because we're just jumping from highs and coming back down, deep retracements. We don't want to be involved in that. We want to lower the frequency in environments like this, even though it might be boring, even though it might not be the most nice thing. You're not trading every single day. You're not making loads, you know what I mean? You're not making loads of percent and stuff like that. However, your job is to trade when it's favorable. This was favorable and we did that. And now your job is to understand when to stop and stop that bleeding, because this is something I've seen a lot with newer traders, especially myself when I first started. You would do well in times like these because you learned something and you were implementing it and it was working. And then you don't know when to cut this off. When does this stop? When do these retracements stop? When do you stop trading these? Well, this is exactly that time. The more you can protect what you've won here, the better you're going to be going into next year. Because in a logical sense, trading's a game where you don't just win and then just achieve nothing. You actually achieve a loss, which is going backwards. So you have to be protective of your capital and any gains that you've made in order to keep that equity curve nice and consistent, and just sort of understand that no matter how you feel, you might want to trade loads, but if it's not favorable, that does not matter. So if we go to the monthly chart as well, we are now going to be opening a new monthly candle. We have this fair value gap right here. However, we are, as we've pointed out, we've consolidated quite a bit, but you could, if you wanted to see a clear shift in structure, maybe you could mark out this monthly low. We expect this to be returned to potentially with this fair value gap. And then we could frame sort of, just monitor price action around there. So I'm still marking levels. You know, it's my job to mark out the levels and sort of keep analysing what I'm seeing at those key levels. And then I can make a decision based off of those reactions. However, if there's nothing there, it's your job to leave it, and that's as simple as trading can be. You know, you don't need to get too involved and try and, usually if something's really hard to see and frame, just don't frame it, just don't have a look, just move on, leave it, go about your days, enjoy your life, go and study trading if you want to, do you know what I mean? Go and back test your model, but just don't place positions when you're not 100% sure of what you're looking at, and it'll help you loads. So pairing that with the euro, as we went through this, we had an inside candle on euro as well, inversely correlated. That looks even worse of a consolidation, so I would not be framing anything with that. GBP is just showing strength, so again, no run on the low, just displacement higher. I'd just leave it. It's not worth it. USD JPY, we are sort of slowing down a bit now. We again, very small range candle, barely any volume compared to these last couple. So this is just all telltale signs. You want to cycle through the markets and it can tell you a story. And this is telling me that volume is being reduced, orders aren't as high, liquidity isn't as high as well. Expansion is not in the market at the minute, so I'm not framing anything because I want to trade that expansion. The S&P500, again, I just expect all-time highs from this position, but again, it's the same. I don't expect too many high runs at this time in the year. Definitely just sort of, if we don't get a shot within the next week or two and nothing sort of comes about, I'd just done for the year. Going into Christmas, I want to spend a bit of time going over like my journal and stuff, and I recommend, if you're in a position where you're trying to get a bit better, you're trying to learn a bit more, understand what you're doing, just take that time off and put yourself in a good position for next year, and it always pays dividends. You know, coming into the year, you haven't done loads of damage, and you know a bit more about how you trade and stuff. So pairing all this of what I've just said about with the Forex Factory calendar, I'll pull that up here. This is the up and coming week. So Monday the 1st of December will be the new trading monthly candle, and we have a new week. So the news for this week is very, very low. It's mainly the Friday, I believe. So we've got some ISM manufacturing PMI on the Monday. I'd leave the Monday anyway, especially where prices. I don't see anything coming early on in the week. Monday and Tuesday, leave. There's definitely not very many news drivers on the Tuesday. Again, same with the Wednesday. We're going to have a late red folder news for New York. I can't imagine it being too expansive. Unemployment claims on the Thursday, that will be likely. If you want to frame something or you want to learn a bit more, I'd focus on unemployment claims due to the labour market issues in America and the inflationary issues. We've covered this in many, many weekly forecasting videos. I would focus on the unemployment data, or the labour data, I should say, and the inflationary data, as those two will be sensitive, especially with the government shutdown that happened. Moving into the Friday, we do have the consumer sentiment and some a couple of red folder news drivers on the Friday, but I imagine that there's not going to be too much this week, especially with the price action that's out and about. So just close that down. You know, this is a time, and it's with commentaries and stuff, where it might not be the most interesting to watch. You're not going to walk away going, oh my God, I've learned loads, or I can see this in price and it's dead favourable. And sometimes I think, to sort of give a bit of better explanation is, no one knows exactly what's going to happen all the time. And I think an unrealistic expectation of newer traders is they want to feel like that. They want to feel like they are understanding everything that's going on and don't feel confused all the time. But one thing I would post here is it's not that the more experienced people know what's happening loads more. I mean, they might do, I'm not saying, if you're really a beginner, then fair enough, but it's the fact that they're confident in what they're seeing isn't their favourable conditions. And that makes a huge difference, because rather than forcing something to try and allow yourself to understand it, you understand what you're looking for, and you can just put the brakes on there and say, I'm going to preserve capital, I'm going to go into a new year in a good position and not just wreck my account or anything, whether that be personal or prop. So yeah, I'm going to leave it at that. I think I've covered everything I wanted to cover. I'm not looking at much. I'm spending not very much time on the charts because I don't see it to be a favourable use of my time. I think actually the more, I don't really, with me more swing trading now, I think if you're an intraday trader, sitting down at a chart and looking and staring at candles printing when it's not favourable on a higher time frame is actually potentially going to hurt you. Best case scenario, you've wasted your time and nothing's happened. Worst case scenario, you've actually seen something placed to trade in an unfavourable condition, psyched yourself out and lost. So, just to take that into consideration. With that being said, thank you very much for watching the 15th video. I'll be releasing these again week on week, just to make sure you guys have an update on how I'm seeing the markets and what I'm thinking. So, thank you very much for watching, and have a safe week's trading.